Happy Monday. Hopefully everyone is having a great day. Not to mention coffee cheers to you all. Throat's a little raspy because weather fluctuations are out of control, just like, well, kind of the stock market a little bit. Okay, so we got to talk about a lot of stuff on this Easter Monday. Hopefully everyone had a great holiday weekend, especially if you celebrated Easter like myself. Spent some time with family, friends, ate a lot of really good food, drank a lot of good beverages, coffee, cheers. What you're seeing on the screen here is my public profile for this YouTube channel. Doing a public profile account challenge, looking to take this total profile in the course of 17 months to which has started 2nd January of this year, so it's already in effect. To 6 figs in the course of 17 months. I believe it's May of next year. The account challenge is going to be over with. Obviously, I have certain rules such as how much I can deposit, etc., etc. But overall, last couple months, this profile has been increasing. My positions, my total cost basis has been increasing because I've been buying a tremendous amount of stock here. Man, my throat's killing me. SoFi, I've increased my position massively. AMD, not really so much over the last couple of months. I did very much a lot of big buys on AMD. Actually back in October and November of last year. I can't believe it's been like 6 months really. But yeah, I've been posting videos a lot in the last 6 months on this channel. So if you want to follow along, this YouTube channel is relatively new. Totally free to like these videos and subscribe. I do have other YouTube channels with a lot more subscribers and viewers. I will be advertising this channel among there. My audience is very different, so I'll give you all a heads up, especially if you see a bunch of, well, maybe nasty, dirty little comments from people that really don't understand how the stock market can severely improve your life, especially if you find well-rounded companies with a great management team, a great outlook and vision, and we are in a drawdown. AMD, a couple weeks ago, was actually down close to 10% here. SoFi was actually almost at break even. Total cost basis on this account, I've been increasing shares like crazy on SoFi. I believe my total cost basis was like $4,900 several months ago. And to be honest, I could very well still buy SoFi at these levels. We are very undervalued on SoFi. I'm not the only one that's saying that, but I am a realist. I'm not an idealist. Because a idealist will probably more than likely say, well, SoFi theoretically should be trading maybe, actually, to be honest, I really don't know. I look at like real type stuff, which means we're in a drawdown. The management team is really guiding us further. The CEO has stated multiple times the stock is undervalued. He's bought at these levels. So therefore, I mean, clear in day, the stock is undervalued. You have people saying SoFi should go at $30 right now. No, that would actually be very unhealthy. Extremely unhealthy. Like, probably having a bunch of terrible allergies, right? If SoFi went to $30 right now, it would once again enter into oversold territory and it would be trading extremely rich. Now, if SoFi was at $30, let's say in 3-4 months, hey, is that possible? Yeah, absolutely it's possible. SoFi, Robinhood could very much go up 100% in a couple months, but just go up like right now over maybe a week or maybe, the next couple days. Very unhealthy. Obviously, Adobe still very much down following SaaS, and SaaS has not recovered. Bitcoin cycle is pulling hood down. Palantir is just really not risk on right now because the market's risk off. Meta is very getting hit because big Mag 7, big tech is getting hit right now. And PayPal is in its own world. Oracle going to be accumulating more shares here very soon. But I mean, overall, it's utterly amazing taking a look at my positions over the last couple months when they were very much in the green to very much a little bloody right now. Before I really get into the charts, going off some news here, and right now it is 14:05 p.m. 2:05 p.m. Eastern Standard Time, simplest terms. So we are still in a deadline phase. And the deadline is going to be ended tomorrow for Taco Tuesday. Pakistan has pretty much drawn up some peace agreements for a ceasefire between the US and Iran. And really, it's what we're seeing right now as somewhat as a very moderate, it's not like a full-blown Christmas tree, or I should say all green weenie kind of day. If anyone is prior service military, you'll probably understand what I mean. You get a little bit of red. Obviously, it's not full-blown like green. Unlike if we go back to Liberation Day, a lot of these gigantic moves up, we basically pretty much had a full-blown massive green day. Massive green days. Definitely for rebounding on Liberation Day last year, not to mention also just trending higher. But right now, it's just very much a tiny little green to show some optimism for tomorrow. It very well could be buy the rumor, sell the news. Obviously, the market knows what is going on, and the market is very much looking at President Trump right now and saying, okay, the Strait of Hormuz, I very well could have butchered that. Oil is on its way back to where we hit at right below 120 a barrel, which is all the way back in friggin' May of 2022, which is crazy. Obviously this is affecting the global economy. Even though the US, okay, may not be using oil per se, but it's forcing pretty much an escalation, and the market is going to be taking that a little negative, or is it really going to be doing the opposite? Because it doesn't really matter how you look at it. High oil prices, it's going to affect everything. It's going to affect small people like me. I'm a very small retail investor, trader. I'm not a Wall Street associate at all. That'd be pretty cool. Actually, no, probably not. I love having my soul. But still, it affects everyone. It's going to affect the Federal Reserve, especially when they're going to be doing rate cuts. It could very well throw into the mix for a potential rate hike, which will be apocalyptic. Having rate hikes right now would be, like, terrible. Because we are still, in theory, in a very high interest rate environment. So having rates pretty much reverse a little bit over the last several years, or 2 years primarily, talking about raising interest rates again, like 2022, it would be absolutely detrimental. So oil is something to really watch, and it's also something that the market is really looking at with a grain of salt. Now, on for some resistance, because these moving averages matter more than you think. And I've gone into a lot of arguments with investors primarily, not traders. Traders very much understand this, and I got taught all this stuff, primarily moving averages and TA, technical analysis, which is really the charts. But TA matters even when it comes to investing, or even short-term investing. Very much long-term investing, TA matters. Obviously, like hardcore investors that just don't know how to use like moving averages, or they don't know chart like formations in a way, they're just use the excuse, well, just buy the stock because in the future it's going to go up. Okay, that could be factual, but guess what? Do you want to be buying SoFi in the 30s, or do you want to see that it's friggin' oversold and buy it below 25 like I was, and then all the way down to where we are right now? You can pick up some really good discounted shares instead of buying at all-time highs, because the stock was overbought. Obviously, SoFi very much oversold still. still very much in low territory, but SoFi is very, very different. The SPY, the 200-day moving average is a couple of hold on, let me get the exact percent on how higher. Let's see. You're talking about 1%, less than 1% higher. Okay, and you're probably saying to yourself, 1% on the major index, that's like nothing. Actually, no, that's a lot. Okay, because if the major index goes up in 1 year, totally goes up in 1 year by, let's say, maybe 3 or 2%, it still finished green for that year. Now, obviously, you want the major indexes to go up a lot more than just 2 or 3% in 1 year. But what if theoretically the major indexes were to go up 2 to 3% in the course of maybe 10 years? 10 years in a row, the SPY goes up by 2 and 3%. That means that, like, a lot of growth companies could very well probably go up by anywhere between maybe 50, maybe 100%. So understand that a major index going up by 1%, it does really matter, okay? Why does it matter even more in this situation here? Because what was support is now resistance, okay? This right here, the 200-day moving average, which is very big, it's now resistance. So we could very well go up by 1% on the SPY, and we could touch the 200-day moving average, and we could reject, and we could start pulling back. So we could go up, and we could do something like that where we may consolidate around 650, and then maybe from here we go ahead and start moving higher. Or maybe we just continuously have a nice V-shaped recovery. Now, you got to remember that the S&P, it's made up of a lot of, or if I should say all of, really like the big tech stocks, primarily the Mag 7, okay? So understand that if the SPY is going up by a couple percent every single day, you're going to have the big dogs like hopefully Nvidia, hopefully Microsoft recovers, maybe even Tesla, okay? Definitely Google, definitely Meta. Definitely, who am I forgetting? Amazon, many others as well. Okay, so we're gonna need a solid bit of news to really get over the 200-day moving average on the SPY. If we reject this 200-day moving average, I'm gonna be buying stock aggressively, because if we reject this 200-day moving average, I mean, for all we know, we could very well trend all the way back down. It's not unrealistical. Maybe then we form an actual double bottom here. It's possible. It's happened numerous numbers of times. We can look back on past chart patterns, and we can pretty much see something similar. Obviously, Liberation Day very much trended up. Obviously, we had a very nasty pullback. Not a full-blown pullback, but definitely pushed up after there. So it's really not unrealistical, and it's also not crazy to do. But that's really for the S&P 500. The Qs, once again, very similar companies make up the top 100 companies of the Qs. Coffee, cheers. The Q is going to have the same situation. Same situation. We are probably about 1%, give or take, away from the 200-day moving average. So we're going to need the entire market pretty much as a whole to force above this area and really close and really stay above the 200-day. IWM, we're already past the 200-day, which is bullish. Russell 2000 is all the small cap stocks out there. So what does all this really, in theory, mean? Well, we get above the 200-day, it signals, hey, there's some level of support from free falling entirely. So you get the fears away from a free fall, okay? And then once you get past the 200-day, you really want to push above what we're right now experiencing is pretty much a Twizzler like of moving averages, pretty much a crisscross of the 50 and 100A. So pretty much in order to signal a very strong reversal out of this drawdown that we've been in, we really got to recover into the 670s, 680s. We could very well be doing that maybe next month. Maybe it could happen sooner. Maybe it happens in June when the new dude gets in the Federal Reserve. Ultimately, it's going to take a very big catalyst to do so. So my game plan pretty much moving forward is just to continue, sticking to my plan, sticking to my strategy, and really see if the news coming for tomorrow is in our favor or not in our favor. But then again, if it's not in our favor of a bullish catalyst, it's stock buying like opportunities. So keep that in mind too, because if something bad comes out of tomorrow, your long-term positions or even if you are picking up, even if you are opening positions right now for a trade, understand that the market is very much risk off. And this is the opportunity where you buy the fear, buy the blood, buy the dip, pick up discounted shares for the future for your long-term positions. If you're trading, you buy the dip, you sell the rip. All right, everyone, I'm going to wrap up today's episode here. Hopefully everyone had a great weekend. Video is under 17 minutes once for finally. And I'll see you all tomorrow for a brand new episode. Later.